Google's stock chart pattern looks bearish, but we found a $140 million trade that looks bullish. So in this video, we will go over this analysis and then show how we are trading Alphabet or Google stock using an option strategy. As you can see, ever since Google made a high last month, the stock has been making lower highs. And the stock is trading near a support price level, same price level as where it started in the beginning of the year. And this technical chart pattern looks like the descending triangle pattern, in which if this continues, the stock will go and descend lower and break this support level. And that is why it is bearish. So if you believe in technical chart patterns, then Google stock is bearish. But if you've been following this channel, you know that we are a believer of how the wealthy investors are trading. And yesterday, February 26, we found a $140 million trade. For the April 19 expiration cycle, at the 140 strike price, calls and the puts. Okay, so you can see that the volume 17,000, 14,000. We know that at least 10,000 of these contracts were opening trades. And this trade, based on our analysis here, you can see here, looks like this on the profit loss diagram, where they were selling the 140 strike puts and buying the 140 strike calls. And this is a bullish long trade. As you can see, if Google stock goes up, it becomes profitable. If it goes down, it is a loss. So this is a bullish trade. And because they sold the 140 strike price puts, essentially saying they're willing to own 100 shares of Google, that requires $14,000 of buying power per contract. And since they did 10,000 contracts, that is why this trade cost at least $140 million to trade. Okay. Now, even though a wealthy investor is bullish with this trade, there could be a more wealthy investor who is bearish tomorrow, because Google stock is a stock that is often traded. You can see here yesterday's volume, 53 million shares being traded. So very high volume each day. So this actually decreases our probability of profit because of the fact that there could be other wealthy investors going bearish any other day. Okay, so that is why if you are more interested in the higher probability of profit trades, I encourage you to go to our website. We'll put a link at the top here where you can learn how you can gain access to the stocks that the wealthy investors are trading, where the probability of profit is much higher because we don't have the issue of these very high volume stocks being traded on a daily basis to complicate the data analysis. All right, so check out our website. We have a lot of information there where you can learn how we can use this analysis to beat the market and not have to use technical analysis or fundamental analysis, because we let the wealthy investors do that for us by simply following their trades, because we know that they are also using very, very many financial research tools and methods to analyze stocks before they make their trades as well. So for our trade, based on this bullish trade, this is how we traded it, right? So you can see here, actually, February 26th, once we move this date forward, you can see here that the open interest here will increase, which tells us that these were opening trades. Okay, so February 27th, there you go. You see that? See how it moved up about 10,000 more? And that is how we know these are opening trades. All right, so you can see our positions here. So this is our trade. Because they're going bullish, we bought the 140 strike calls and sold the 150. The position is here, buying and selling. Okay, so this is what our trade looks like on the analysis. This is a vertical call spread option strategy. Each trade only costs $345 each, much less than the trade that the unusual options that we had analyzed. These wealthy investors have a lot more capital, so they were putting on trades where each contract costs $14,000, right? So our trade here, you can see it's also going bullish and long with a positive delta. And if the stock goes up, it becomes profitable. If it goes down, it is a loss, okay? Because this is a bullish trade. But notice how our strategy, though, has a better risk to reward ratio, because you can see here that we are risking $345 per trade. If it goes down, or if it goes up, we could potentially make, you can see here in the blue line, at expiration, $655, around there, right? So that's a risk to reward ratio where our reward is a lot greater than our risk. So we want to have favorable risk to reward ratios when we trade options. Okay, so that is how we are trading Google. We are going to go bullish despite the fact that this technical chart pattern is bearish. So let us know in the comments below, what do you think will happen to Google? Do you believe in this technical chart pattern that Google will break below support and continue to drop lower? What do you think will happen to Google? Let us know. And as usual, please smash the like button, subscribe if you haven't, and make sure to check out our website if you want to learn more about our analysis and get better trade ideas.